The government is trying to take away all the power from the people, but once they have everything, they shoot the moon and they have no power at all. And gold and silver start everything over. Inflation in China has begun. The platinum to silver ratio is approaching a new all-time low, excluding the 1980 silver top. So if you would like to exchange some silver to platinum, you still have a great opportunity to do so. And despite gold being at all-time highs and silver climbing fast, we still have the final monetary crunch ahead of us, which could very briefly bring down the prices of everything, including gold and silver. Gold the least, but silver more. It won't last long, but it is still ahead.
Since 2000, gold and silver have shown a knack for appreciating when the Fed cuts rates by a full half percentage point. In a remarkable display of market dynamics, gold prices have soared to unprecedented levels, setting a new record high and closing price. This surge is attributed to a perfect storm of economic and geopolitical factors, primarily driven by the Federal Reserve's recent monetary policy shift and escalating tensions in the Middle East. Rafi Farber, a well-known commentator from the Endgame Investor on Substack, mentions the attempts to suppress gold and silver prices, particularly after the Federal Reserve's recent rate cut, have failed. Regarding recent market events, Rafi underscores the platinum to silver ratio is nearing a breakout, offering a key chance to trade silver for platinum. Platinum industrial demand is expected to rise by 1% in 2024, reaching 2.37 million ounces. The WPIC says this increase will primarily be driven by a 47% year-on-year surge in demand from the glass sector. Despite short selling, Rafi explains that gold open interest is rising, while he predicts that if it approaches 2020 levels of 800,000, another price suppression may occur, urging caution. He also warns that a sharp rise in silver open interest could signal a price drop, similar to past market cycles. The number of open COMEX gold futures contracts grew on Monday, above 546,000, swelling by 7.8% from 1 week earlier. That took an open interest in those U.S. gold futures contracts up to the largest since late July's spike to the highest since March 2022, the immediate aftermath of Russia launching its attempted all-out invasion of Ukraine. Now, we present the clips of Rafi Farber's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Platinum to silver ratio approaching end of a 26-year triangle, okay? You have the opportunity, if you would like to exchange some silver for some platinum. I myself only have 1 ounce of platinum. I exchanged it for about 34 ounces of silver. I spoke about that story a few silver reports ago, a few months ago. If you would like to have some platinum and you have a little bit too much silver to carry or to handle, you can exchange about 31 ounces for it for a nice ounce of platinum. And I don't think you're going to get much better prices than this ever. We have a descending triangle that is going to break out to the upside at some point soon. It is on its convergence point over here. It started since 1998. So this could be one of your last chances to exchange some silver for some platinum if you're interested in platinum. Silver is a money. Platinum is a less good money. It's less liquid, but it's at such a good price that I would be tempted to exchange more silver for platinum if the opportunity arises and I can find a coin shop that can supply it here. Mr. Slammy fails completely. Gold edition. This is about the attempt to slam the price of gold and silver yesterday. You can see here that this over here post the FOMC meeting and Powell's press conference. So gold went way up to an all-time high, just about 2,600 in London prices. And then Mr. Slammy came and slammed it down to below $25.50, I think about $53. And then Mr. Market responded and we're back up to an all-time high. Now, we're going to go into silver edition of the same thing. You can see here the 50 basis point cut over here rose silver to a high of somewhere around $31.30. Then Mr. Slammy came in and eventually failed after a few hours, and we're back at the highs here in silver. So the question is, was this an attempt to slam down, or was it something else? And the open interest can answer that question for us, because we can see here that the open interest is at 545,000, right? It hasn't gone down from these numbers over here. This one says 538. The current number is 545, so open interest went up, right? That means that more contracts were opened by short sellers, and those contracts were met by longs at higher prices. So the opening up of more short contracts, for every short there is a long, obviously, did not bring the price down, only very temporarily, ephemerally for a few hours, and the longs are back in control here. So the slam did not work in gold, and we're not in a short squeeze yet, but the shorts keep opening up new contracts at ever and ever higher highs here, so they are in trouble. To give you a longer perspective here, this box over here is still ahead of us. The open interest in gold, the all-time record was just before the 2020 slam down, and around February of 2020 at 800,000 contracts. We're nowhere near that now, but what I'm saying is that before a financial crisis, usually you have an incredible rise in open interest in gold. I don't know why that is. I don't understand the mechanics of it. I'm just saying it happened here. And then you had a huge slam down to 1450. It scared the pants off of a lot of stackers. It doesn't look very big on this chart, but it was very big at the time. So if we start to see open interest really climb high, like towards 700,000, 800,000 contracts, that could be a signal that the final slam is ahead of us. Just be careful of it. It might not happen. Just be emotionally prepared if it does. This is also still ahead of us. This little peak in open interest here in silver was also an all-time peak going back to 1980. 1980 was higher, but this was the peak excluding the 1980 silver parabola, and it brought silver down to somewhere in the $11 range, freaked everybody out. So if we see silver open interest climb to about 240,000, it's right now at about 140,000. We're nowhere near there yet, so we're in a different situation. Just be careful of this and be advised that it could happen and be emotionally prepared.
According to Rafi Farber, despite recent gains, Bitcoin has been struggling to regain its 50-week moving average relative to gold. He notes that Bitcoin recently hit 24.49%, and has tested this level multiple times since 2016. Rafi warns that repeated hits on support levels often lead to a breakdown. Bitcoin and gold show a stronger correlation in 2024, outperforming other assets. Gold spiked after the Fed rate cut to 5%, expecting more growth in the coming years. Bitcoin feels selling pressure, preventing a breakout above $60,000. BTC and gold both performed better than other asset classes and rallied together. This is also the first interest rate cut since 2020, when the rate was cut as low as 0.25%. From 2022 to 2024, inflation-fighting rate hikes lifted the rate to its peak of 5.50%, which it retained for more than a year. Since the year 2000, gold has outperformed after each Fed rate cutting cycle. Shifting focus, Rafi predicts Chinese stocks face greater risks as long-term support, which has been in place since 2005, has broken. He warns a collapse could trigger a global deflationary spiral, leading to a final round of money printing and the end game. Let's get back to the interview.
Bitcoin trying to regain 50-week moving average versus gold very quickly on the Bitcoin chart. Yes, Bitcoin has been going up lately over the past 2 weeks to be exact, but it's still struggling at the 50-week moving average here relative to gold. The 50-week moving average is at 24.26, and Bitcoin is slightly down from this chart. This chart is a little bit delayed, so it's this 24.49 here. Basically, Bitcoin is challenging, trying to break back through the 50-week moving average. I don't think it will be able to do it, but we'll see. Bitcoin is Bitcoin. It's very unpredictable. Chinese stocks at major support. This is what I said in the introduction. The major support line is at about 2,700. As you can see here, it's been hit 5 times, once in 2016, once in 2019, twice in 2020, you could call it 7 times, and twice in 2024. Once you have this many hits on support, it usually breaks through. But let's look at what is going on in the longer term in Chinese stocks. This is a lot scarier if you're invested in Chinese stocks. We have this same support line, the short-term support line, this horizontal line over here. You can see 1, 2, 3, 4 on the short term, 5 going back to 2016, or 6 or 7, depending on how you want to count it. But we have a longer-term uptrend line from before the great financial crisis of 2008, which really drove Chinese stocks a little bit mad, or a lot bit mad, from 2005 until now, or until, to be precise, somewhere before 2024. Is that 2023, 2022, somewhere in there? There was an uptrend, right? And it hit once here, once in 2014, once in 2018, once in 2020, and it broke through finally somewhere in 2022, and now it is resistance. You can see here that we challenged this uptrend line last year, and now we are testing the final support zone over here. So if we break this, the uptrend line that has been in place since 2005 is now broken. Chinese stocks are in trouble, and China being the second largest Keynesian economy in that sense, if it goes through a deflationary spiral, the rest of the world will follow, and then there will be the final round of money printing. All this stuff is going to happen at the same time in unison, and we will have our end game.
Experts are generally bullish on gold for October, but differ in their predictions of how much higher prices might go. The price predictions for gold are usually optimistic, with many expert statements mentioning prices of $3,000 in the near to mid-term. What factors do you believe will drive the future price of gold, and how are you planning to position your portfolio in response to these trends? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.